Dear friends, welcome to weekly view on markets. Nifty closed this week with small gain. It went up during Diwali days but corrected at the weekend. Overall action is consolidation. Broader markets also consolidated with positive bias. FIIs have started buying in small amounts and DIIs continues to buy. That is giving support to the markets. Any correction in the market is a buying opportunity for long-term investors. Second quarter results so far are not inspiring the markets. They are lackluster. There is no growth in uh, revenues and profits. So results are just very tepid. However, earnings recovery is likely from the December quarter, that is the next quarter, as per the business updates given by the companies during the festival season. Most of the companies have given very good business updates, but that will get reflected in the next coming quarter. Investors need to have patience and continue their investments at regular intervals. Nifty closed with a gain of 85 points for the week at 25,795. During the week, it has briefly gone above 26,000, but corrected and closed at 25,795. Bank Nifty just lost 13 points. It is at 57,699. Mid cap index gained around 0.5%, closed at 59,231. Small cap index gained about 130 points. It is at 18,253. India VIX is quite steady at around 11.59. Most of the sectors gained during this week, but with very small gains. It was more of consolidation. Information technology sector gained about 2.96%. PSU banks gained around 2.54%. Metals gained about 1.45%. Media sector gained about 1.35%. Oil and gas, realty, defense, energy, infrastructure all gained from 0.5 to 1%. Pharma, commodities, and private banks were consolidating with small gains. Public sector companies lost around 0.8%. NBFCs, FMCG companies, auto sector, healthcare companies all were consolidating with negative bias. Now let us look at technical charts. This is the chart of Nifty. If we look at short term, the Nifty has closed above this short term resistance level. Now this line will act as a support. The support for Nifty is at around 25,700 and Nifty has closed exactly at the support level. I expect Nifty to continue upward journey in the next week. If we look at the long term, as long as Nifty is trading above this long term support line, that is, as long as it is trading above 25,500, it is a buy on dip. This is a chart of Nifty mid cap index. Mid cap index also has gone above this resistance line, and after that, small correction is there. So if it is holding above 58,900, uh, momentum is positive and it can go to higher levels in the coming week. This is the chart of Nifty small cap index. Small cap index continues to trade in the broad range of 18,500 on the higher side and 17,500 on the lower side. It has to break conclusively above 18,500. Then only we will see strong momentum coming into small cap index. Otherwise, it will continue to trade within this range. Bank Nifty chart looks quite strong. It has crossed the major resistance of 57,600 and it has closed at around this level, which now acts as a support. Next week, Bank Nifty index is likely to move to higher levels. There is strong momentum in public sector banks and also private sector banks have given fairly good results and that will give support. And moreover, FIIs have started buying. They will buy into bigger companies in financial sector. That will give support to bank nifty. Now let us look at some of the macroeconomic indicators. India's macroeconomic indicators continues to be strong. Shows that our economy is in good shape. RBI forex reserves has gone to almost around all-time high levels of 702 billion US dollars during this week. It has gone up by 4 billion US dollars during the week. Forex rate is at 87.85 rupees per dollar. Rupee has also started strengthening. It was at 88.5. From there, it has come around 87.85. US dollar index is at around 99.05. Brent crude price is at 65.94 dollar per barrel. Crude price has jumped by around 3 to 4% during this week. US has imposed fresh sanctions on Russian oil companies. And due to this, the Indian oil marketing companies are trying to adjust their supplies and they want to cut Russian imports. So because of this, there is a jump in the oil prices. Still, it is below 70, which is quite good for Indian economy. Gold price is at 1,21,490 rupees for 10 grams 24 carat. Gold prices after hitting all-time highs has corrected by around 3% in last 1 week. And silver price also after hitting a record high of around 1,70,000 for 1 kg, it has corrected by around 7%. The gold and silver prices are likely to correct or consolidate at the present levels. So many investors look at the return given by gold and silver for last 1 or 2 years and they are attracted. So my opinion is that they have already run up. This is not the right time to invest in gold and silver and they may not give any return for next few years because of sharp run up in last 2 years. FIIs have bought 342 crore in equity. DIS have also bought 5,945 crore in equity during this week. So continued buying by DIIs and FII turning into buyers now will give good support to the market. And if FII continue their buying, our markets will see higher levels. CPI based inflation for September month has come at 1.54%. The inflation is trending down, which may give some room for RBI to cut rates. So in US also the inflation has come down, and if Fed cuts rate further in US, RBI also may cut rates in the coming quarters, and that will be good for the markets. Charts indicate that further ongoing consolidation with upward bias. Quarterly results so far are very tepid, and the result expectation is also very muted because the business updates given by the companies were not very encouraging, and street expectation is that results won't be very good during these quarters. However, there is an expectation that December quarter would be good. There will be a turnaround in the earnings of the companies. So any dip in the market is a good buying opportunity, and to invest more, investors should have patience. They should remain invested. They will see they will get good returns in the long run. This is all for this week. If you like my video, please subscribe to my YouTube channel. You can refer to your friends. You can ask your questions, which I will reply. We will meet again next week. Thank you.